Welcome to the Daily Brief. This is being prepared Friday, September 30th, where we'll briefly go over the highlights in the market today and then see how things look for Monday, October 3rd. And way to go, Seattle Mariners. First time in 21 years, they made it to the playoffs. Yes, I'm from Seattle and I've been a big Mariner fan my whole life. Anyway, back to the important things here. Let's go through a recap of what happened on Friday. We were down, but we're seeing a real convergence of oversold indications. But we've been seeing that for a few days now. We had that one up day in the past week, only to give it all back on Thursday. We had the up day on Wednesday. Are we going to see something like that now? We're finally coming into October. This is much more favorable on a seasonality basis to the market. It doesn't mean that's what's going to happen because we've also seen big crashes in October, but we're seeing a real convergence of a lot of different things coming together that if a bottom was going to be put in place, yeah, this would be it. But what kind of a bounce are we going to get? Are the headwinds just too strong? Is all the other news that's going on right now just too much for the markets to deal with right now? That is yet to be determined. So at the open, we did have a lower open after the economic report came out. It was stronger than expected, and we could have gone down a lot more than what we did. But we did gap lower, and then we saw some initial buying coming in. It pushed prices higher. We actually went positive, and we got above the daily pivot, but that's pretty much as high as we got. We never even got up to R1 at 36.82. That was above where the prices went in Friday's session. Then we began to fall. As the day went on, selling then took prices back negative, and we just kept falling and falling and falling right in the close, into the close. We closed right at the 200-week moving average, which is another big, big deal if we end up going below that. But when we closed at the lows, that's never a positive thing. We closed at the low for the session and set another 52-week low. We were down 1.51% on above average volume because it was the end of the week, the month, and the quarter. We saw a lot of extra volume. Because of that, the technicals are negative. You can't dispute that. Everything is pointed down, but we're seeing so many extreme negative readings right now that it's almost like, okay, we should be at an exhaustion level at some point. Are we just going to chop sideways? Are we going to get some kind of a bounce out of this? If we do get a bounce, will it have any legs behind it? Can it last more than just 1 or 2 days? We don't know that at this point because the real fixation right now is inflation and interest rates, not only in the US, but foreign as well. Specifically, a lot of problems going on in the UK right now. There's a lot of rumblings going on in Russia right now with the Ukraine situation, with the Nord Stream, not Nordstrom, Nord Stream pipeline situation. There's really no idea who had a real strong motive to even sabotage the pipeline. You can make a case for and against for pretty much anybody right now. So we're not really sure what happened there. All right, let's go back and talk about some comments. A large part of the weakness is being blamed on concerns with Apple, with their sales for the new, I guess, the iPhone 14. And then Nike actually was downgraded with some earnings warnings. These are two major companies. And if they start bringing negative news out, that has a tendency to really impact the markets. We still have the same yield curves that have been inverted, are still inverted. And then sentiment, we're tipping down. We're starting to get extreme. So not only are we seeing a lot of things on our charts, people are starting to get to that extreme fear level. We had personal income. It came in up 0.3% on a month over month basis. That was as expected. Personal spending, it actually was up double what they had expected. When I saw this, I thought, oh, great, we're just going to tank. Is that something in and of itself? The fact that in the face of news that the market could have easily used to justify to go lower, yeah, we were down, but we initially saw some buying coming in. and things could have been much worse than they were. Are we starting to see this bad news? It's like, okay, we've heard all this before. Tell us something we don't know kind of mentality. And that's a lot of times when things can bottom out. We had the final consumer sentiment reading. It came in a little bit weaker than the initial reading. It came in at 58.6, which is not very good. They expected it to be 59.5, which is what they came out with 2 weeks ago, which is still a pretty sucky score. You want to be up in the 90s and for things to be much more positive. The Chicago PMI also came in less than expected. Now, this is regional for Chicago, but when we're below 50, that's suggesting contraction. They expected it to come in at 51.9. It came in at 45.7. Our trend is negative and it's above 20. Our bias is negative with the down day, and our momentum continues to be negative. We are negative and oversold as far as technically. This next part I should have taken out. This applies to Friday's session, but might be worth repeating here because we have all of this behind us now. This end of the month, end of the quarter window dressing that may have been happening. Will that open things up a little bit for October to possibly be more positive? We have the final IHS market manufacturing PMI coming out. That's not a real big deal. The ISM manufacturing, that is a big deal, and that'll be coming out in Monday's session. We also have construction spending, the whole list of geopolitical events. Take your pick. But it's inflation and interest rates that the market is concerned with. Even though we've got a hurricane we're battling right now, a lot of economic things going on. We have an election coming up, a real negative environment right now. People are not real happy about things, but it's inflation and interest rates that are really affecting the market. There could be more coming out of the UK. We could get more out of this whole Nord Stream pipeline situation. Things could escalate or de-escalate with the Russia-Ukraine situation after Russia said, oh, these 4 areas are now belonging to us, kind of like they did to Crimea. So our scenarios, it's hard to go with the down scenario because we're so oversold, but we're clearly going down right now. We can't really go with the up scenario because we're not seeing any kind of sustainable bounce that's really helping things to improve. We can't really go sideways right now because we're above 20 with the ADX and it continues to advance and the red line's on top, so it is negative. So our conclusion then is we're negative overall, but oversold pretty much across the board, short, intermediate, and long term. So thank you. Please feel free to check out the full-length video if you want more of a discussion of things. I will be posting the weekly video over the weekend as well as the intermarket analysis video.